Well, team, if you are not interested in the truth, I'm not a good guy to follow. That's for sure. My guess is that most people in the mortgage industry will be pretty quiet today, as we've seen just a bloodbath in mortgage bonds today after the Fed spoke. Caught the market off guard a little bit. I think that people were expecting the Fed to just continue to be, well, we don't know what's going on. Just keep running. At some point, they've got to acknowledge the data. At some point, they have to. Even though they're using super biased calculations, at the end of the day, they're still showing data, inflation-wise, that warrants action. They just are. So I'm not going to sugarcoat it. Just going to show it to you. Derrick Evans, VA Home Loan Specialist, NMLS 155010. If you know a veteran wanting to use their VA home loan benefit to buy a REFI, have them give me a call. And here's where we're at. Yep, that's the one. So, not pretty, team. As I had mentioned, this has been setting up for some time. This, head and shoulders pattern here that we have been following, that I've been worried about, was going to break us to the downside. And while we got the pump fake back up here, which had a lot of us super positive, and we were locking every day through this. I mean, I couldn't believe this was such a gift right here. And congratulations to all my clients whose loans got locked there. Then we had 3 bad days. These 3 guys right here weren't fun. Yesterday, the indecision day, remember? We're looking at that going, man, this doesn't look good, team. I mean, that's basically what I said yesterday. And here it is. There it is. 59 basis point shellacking. Now, I don't normally look at other coupons, but I'm going to today just because it's important to kind of see, I think on a day like this, here they are. So this is the mortgage-backed securities 2.5% Fannie Mae coupons. We have, other ones too. Here's the 3%ers. You can see they're down 30 basis points. So a little bit more yield. They're not taking as much of a hit. The Ginnie Maes here, the 2%ers, destroyed, down 64, just crushed, murdered. The Ginnie Mae 2.5s also down 50, not good. The Fannie 2%ers down 77. I mean, this is as bad as it gets, for a single day without there being like a COVID or a 9/11 or something like that. So remember, when these bond prices go down, interest rates go up. So ideally, we want to see green. Green is good, red is bad. That's what we're hoping for when we look at these charts. And we're not getting any of that today. Today's not a good day. Today's bad. So if you are looking at a refinance, my advice will stay the same. And get yourself in position, get your loan moving forward. There will be better days to lock. There will be than today. I'm sure. If you have a long time horizon, if you're in a refinance, you're not in a purchase where you have to lock by a certain time, you'll probably find a better day to lock than today. So if you're going to refinance, get your loan in motion, get everything done. You don't have to not do the loan or wait until you lock to do the loan. You can get things moving, and the shorter time frames for locks can actually help you get lower rates too. So if you get your loan down the road where you're actually pretty much ready to close as soon as you lock it, you have a better chance to get a better rate anyway. That'd be my advice there. For purchases, pretty much right now, you're gambling, significantly gambling, if you're betting on this just being a one-day thing. I mean, if we think, okay, the floor has been put in 102.70, which is what the bottom was of this candle. Hey, the floor is in. This is it. That's the bottom. How could we be sure of that? We didn't get down here to the next layer of support. We could easily see another down day tomorrow, easily. So why is this? So that this is what happened. So I want to show you that first. Why? But why? What's going on? Well, essentially, you remember the Fed is a board. We hear from Jerome Powell because he's the chief, whatever you want to call him. But the Fed chair. But really, it's a board. It's a meeting of people from different Fed banks all over the country. And collectively, what they vote on, what they say, sort of gets culminated into, their statement. And so more of them are concerned about inflation, and they therefore collectively voted to move up the timeline based on where those votes are as of this one, to move it up from 2024 to 2023. Now, the reason why that's so significant is because it only sounds like, well, it's just 1 year. What's the big deal? 2023 is a year and a half from now, and that starts to get into the timelines of a lot of different investors' outlooks. A lot of different big investment groups, they will have outlooks that is now landing inside of quite, in the thick of things, whereas 2023 may have still been a little bit outside of some of those concerns. So we're seeing a little bit of a knee-jerk reaction for that. At least 2 rate hikes by the end of 2023, I should say, and they're talking about starting them in 2023. So, and then there was also, this is an important note, 18 members of the Fed possibly increasing rates as early as 2022. So 13 members believe the Fed will increase rates in 2023. 18 said possibly as early as 2022. And of course, they also talked about their inflation forecast for the year, expecting 3.4%. Now, they did say that the inflation was transitory, which, no, I don't know if anyone believes that, but they're sticking to it. And let's see. What was the one thing I wanted to show you from this? They're still keeping rates at 0. This I thought was funny. He said, you can think of this meeting, this is from Jerome Powell. You can think of this meeting that we had as the talking about meeting, if you like. I now suggest that we retire that term, which has served its purpose. So he's trying to say, hey, listen, we're not doing anything here. We're not doing anything. We're just talking. We're just talking about talking about talking. So he's literally like basically saying we're doing nothing here. Which I found to be hilarious. But anyway, bottom line is markets disagreed. Now, if we look at, so crypto, is down a little bit, 3%, 3%, 4% Bitcoin Cash. So crypto is down. Oil holding steady here in the low 70s. And I don't think there's going to be too much that's going to be able to affect that. Stock market, pretty much across the board, down today. Not huge, though. Was not the bloodbath I expected. And it just shows you how many buoys there are for the stock market, how much protection there is for it. Who knows where that comes from or how that works, but that's what's going on. And the VIX didn't move that much, 6% on a day like today. So I think that either more of this was baked in the cake than I expected, or there was just some buildup here. And at the end of the day, the machines that are trading all of these different securities from, the futures in the stock market to oil, to bonds, to crypto, they're just finding the path of least resistance. So if there's fear in the marketplace, they'll just move wherever it's going to be, most easily moved. And that's that. And that's what we can just kind of expect. So, don't shoot the messenger. Yeah, correct, Anthony. This is not good. And that is very, very, very true. This is definitely not good. So not good for mortgage rates, not good for the real estate market. But the last time we saw rates go up, the real estate market didn't blink. This time could be a little bit different. Homes are being more appropriately priced. We are seeing, a little bit more hesitance with buyers. I've seen buyers recently where we've gotten great relationships with the listing agents. We've gotten in positions where we can win. And usually what happens when you do that is the listing side will come back to you and say, okay, we want to go with you guys. Here's where we need you to be. We like you. We think you have the best chance of executing. If you can come to this number, then we'll accept your offer. And we're seeing buyers go, nah, we'll walk away from that. Not, you're starting to see buyers just get a little hesitant. And, that also I would say is not great, but the market's been very, very, very heated up. And so if this creates more opportunities for buyers to get their offers accepted, then I think that's great. And that's what it has been so far. So I wore my green shirt today. I have multiple green shirts that I try to wear on days like today. I may as well retire them now. Didn't do a damn thing. And so let's see what happens tomorrow after this brutal, brutal day here. It's one of the worst candles we've seen in a while. And the thing that's really bad about it is that it's off the heel of these three, bad days here, which these weren't terribly bad days in and of themselves. But, when you lose 50 basis points, 60 basis points over the course of 3 days, back to back to back, that was kind of, for me, the sign that some of the big money had the info. They knew where this trade was headed. That's always what scares me. Of course, I felt the same way about it over here, and I was wrong. We recovered from that. But it felt like some people knew what was going to be said and what the reaction was going to be, and that's also kind of how it played out. So better luck to us tomorrow. Hang in there, folks. If you have questions, if you need anything regarding VA home loans, I'm your guy. Give me a call if you want to buy, refi, get more information. You can call or text me at the number right there. You can send me an email. I'm happy to help. That's what I do. That's what I love. That's why I'm here. So have a great day, team, and I'll follow up with you tomorrow. Take care.